All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Let's make sure the voice and the sound is good. It is Wednesday, June 8th, 2022. Let's get back to work. Dow futures are down 188 points this morning. NASDAQ down about 65. S&P down 0.52%. Russell down 0.52%. Pretty much half a percent down on futures. 10-year yields are above 3%. Off the highs right now, 3.018 is the quote. Dollar index is right now at 102.44. Let's go ahead and bring up that chart as well. Coming down from their highs as well. I think we hit a peak overnight around 102.76. So trending in the right direction for the stock market bulls. Let's go and take a look at the VIX here, bottom right-hand corner. You can see that we're still below this major support here around 25.38. Right now we're at 24.65. We do have a gap to fill to the downside now at 24.06. Let's go ahead and take a look at crude oil, up about 0.8% this morning. Seems like it goes up every day, but that 121 level, 120.96, it's a fib level. Let's go ahead and bring it up so we can see why, or possibly why, we keep getting rejected that level. So I did a Fibonacci retracement level from the peak of 130.50 to the low of around 90.11. We are now testing the 23.6 Fibonacci level. Let's see if that does break out. Let's take a look here at gasoline futures. Now, gasoline futures, that chart is a little different. You can see how much that's grown. We'll go ahead and we can add a Fibonacci extension. Let me go ahead and add that. We'll go from top to bottom if you want. Either way, same deal. We'll go to the most recent low, which is right here at 288.21. And you could see, again, based on the Fibonacci level, the top, we rejected the top. So again, now you could start taking a look at possible targets if you are a gasoline trader. $4.01 would be the first support. Let's take a look at gold this morning. Gold futures right now trading at 18.55 an ounce. They are up. Remember how high we got to around 2078. This Fibonacci level, I believe, is from the weekly low, which was right around April 2021, 1673 an ounce. We are now above the 38.2 Fibonacci level. So again, pretty sideways action for gold. Don't expect tons of moves. Silver up down 0.42%, excuse me. Dollar yen continuing to climb higher. The yen getting absolutely smacked. Look at that, 134.20. CAD yen, I had a discussion with Nick on that. You could see, had to expand this a little more. And look at that clean breakout. That was the next resistance there. We can go and cancel this alert. Now we got to start looking at possibly 107.13 as the resistance. That is the high in 2008. Pretty wild how the Canadian dollar and the yen, how much they're moving due to the yen being nuked by the BOJ for the most part. Let's go ahead and take a look at Bitcoin. Bitcoin trading at 30,170. That's on future side, down 2.82%. Kind of stuck in range, not much going on. Again, just stay above 30 if you're a Bitcoin bull. Again, talk about pretty much the most hated chart right now in economics, if I want to say, is right here on Bitcoin. You could see since pretty much for now almost, well, let's say 3.5 weeks, we have been stuck between 32 and around 28 with a big drop at 25,397. I believe that was the Luna collapse, continuing Luna collapse, and that's just been stuck. Nothing you could do there. I mean, again, I'm still holding my Bitcoin. Nothing has changed there, but just watching and see if we hold that 30,000. If not, if we cannot hold that, guys, remember, sustain below 30. We're going to go to 20. We're going to retest that 2017 high. That would not be good for crypto holders. Again, if you're an earlier holder, yes, but if you're a later holder, it's going to take a little patience to get there. A couple things I was watching this morning. This is from Bloomberg, some growth concerns. The World Bank slashed its growth forecast for the global economy this year to 2.9% from a January prediction of 4.1. And April's 3.2 estimate, and warned that several years of above average inflation and below average growth tie ahead. Here, let's see. This is however, longtime bull Neil Dutta, head of economics and at Renaissance Macro Research, says that labor participation and demand for durable goods are still adjusting to the post-pandemic conditions. driving up prices and things will settle down. I agree with that sentiment. Kind of the same deal. It's not about the fact that no one wants goods. That would be demand dying. Again, it's harder to build demand than it is to create supply. We saw that the imbalance happened to Target and Walmart in terms of their inventory. Now they're slashing inventory. You're going to see a little more rollbacks on Walmart or sales at Target. How many companies have done this? I'm not sure, but that was kind of the line towed by OPEC and a lot of these manufacturers were, okay, we don't know how much demand we're going to get post pandemic when everything started opening up, the grand reopening. And they were wrong. I mean, let's take a look at oil for a second in terms of the fundamentals, the drilling and everything. We do have access to gas, and globally, the United States has one of the lowest fuel costs in terms of gas. Now, that doesn't mean much if you're an American resident or citizen, but again, let's have a little perspective. Keep in mind how many people were working from home in 2020 and 2021 when gas prices were low, below $2. Not a lot of people were, feeling bad for the oil companies. If you were head of a refiner or an oil company, you're pretty much at a crossroads. You have pretty much everyone who hates you. EV that's coming up, polluting the environment, whatever you want to say. Their capital returns were not that great. They were in debt. Dividend yields were very high. Again, these oil companies are only just making up now from 2020 and 2021. And remember, in 2019, oil futures went negative. So there's been a lot of turmoil for these oil companies, and finally they're getting their due. Finally, they're getting let's say, the respect they deserve as a valued company, meaning dividend paying, capital return, not in terms of growth. Now we're just growing in terms of oil companies. XOM nearly all time highs, I believe, in stock price. But again, these are cycles. That's what I'm trying to imply, is that even with the oil refiners and the producers, they had to forecast. They did not forecast this kind of demand. And of course, the global issue with Ukraine and Russia. That's pretty much unpredictable. So again, does the market even out? It does. Eventually, it does. The question is when. So again, at here, I would not want to buy energy just yet. We talked about X1 being near overbought. I think a little bit of short-term weakness in oil, possibly. We talked about that 38.6 extension. I'm not saying it's going to go to $50 a barrel, but again, a $10 pullback. Maybe we get to $100 slightly being, and then we bounce back towards summer driving season with a lot of demand for travel. That sounds about right to me. Again, things get overshot. I think oil's been consistently green for the past couple of weeks. And just like when you have up and down, same deal. You got to look at possible patterns there. So I do expect oil to stabilize before the kind of the rally. I think oil pulls back here and then kind of gives a little bit of a buoyancy to the consumer discretionary, the shopping, anything that's not travel. Their stocks will benefit from that. Energy companies may take a slide back. I think that's an opportunity. I am long energy in my dividend portfolio, obviously, but again, keep an eye on that. I did add to my ETF for the dividend port that's pretty energy heavy, very dividend focused. I put a market order on that. I do that every month, so that's added. So again, I like oil. Don't get me wrong. But would I go ahead and buy any kind of refinery here or any kind of position in an Exxon or CVX? Just not yet. I think we can get a little bit of a pullback. Maybe we get to 110 a barrel. Maybe we get to 105 a barrel. Again, just a little bit of rollover. Maybe inventories today are higher than expected. We get a little bit of a pullback, a couple of bucks to give stocks a little bit of a benefit short term, and then we roll over possibly in August, which is what I'm kind of looking at. Again, we're getting higher. I think we do get to 4,200 this week. That was my call. We were pretty close last week at 41.80. We did have a nice rise for the past 2 days. Right now, we're testing the 100-day moving average on the hourly. Let's go and bring up a daily here on S&P futures. And you can kind of see that 41.01 level, even with a kind of a triple bottom. Last time we had any kind of bottoming formation, let's say, the last time we had that, we've had a bounce, obviously. That was back in May. So let's go ahead and take a look here at S&P, right? And if there's one thing you start noticing that every time we've had any kind of consolidation for about 5 or 4 days, something big happened. Whether it was back in January with about a 4-day consolidation, and then we bounced. Then we had about another 4-day consolidation back in February. We fell. Another 4 to 5 day consolidation, one leg down. 4 to 5 day consolidation in March. We soared from 41 to around 4,600, 500 handle move in about about a week or a week and a half. And then we continued down. We had another consolidation for about 4 to 5 days. This is in April 18th. We continued down. Another consolidation. Right now, about this one is about 4 to 6 days. You could see about 6 days or so. That's about a week. And that continued to fall. And then we had a consolidation period here of about 7 days. Again, right around mid-May, and then we bounced. What are we getting here? 1, 2, 3, 4, 5, 6, 7. Consolidation here. So I'll tell you what could happen, and then I'll give you my prediction. Let's take a look at S&P. Okay, now we're in. See 4 to 6 candles, right? We're seeing that consolidation here. Now, again, it could be up or down. We know that. But we've tried to break down. You could see that that triple bottom held. I don't believe in triple bottoms. Usually it does break down. But forget what I believe. Now it's all about, hey, does it sustain? So I think we are setting up here an inverse head and shoulders. You could see it. If we can get to around 4,300, maybe we consolidate again at this next level, hold 4,200. I think we go higher to 4,400, and then we'll possibly roll over. And again, you have this bigger head and shoulder pattern that's possible. It's a lot to take in, but again, I think 4,200 does come. That would be new support. Get us to 4,300, the 100-day moving average, and then we'll possibly roll over after that. That's just my prediction. So I'm waiting for 4,300. I really want to see if we can get back to 3,800. Can the buyers defend that level, or more pain to come? 3,850 is right around my level. 3,750 is my level to where I want to buy in terms of value, in terms of what I'm going to get PE. Let's answer some questions. Thoughts about a recession, how it can affect this market? Well, obviously a recession is not good because then everything gets repriced. That's the key. We have to reprice earnings. We have to reprice corporate balance sheets. We have to reprice debt if you have a recession, because it's all about that growth. That growth is that factor when you do a PEG ratio or when you're doing any kind of financial analysis. The assumption is that the economy is growing. But if you have a recession, meaning contraction, then you have to redo everything. Stocks would be a lot lower. We'd probably get to 3,400 at that point, 3,500 maybe. If that's the case, if we're lucky, depends on how the recession is. Again, how bad is unemployment? How bad is GDP growth? You know, there's a lot more factors to that. How much are commodities now? As an example, one could say here the market has priced in a recession. Sure, you can have that perspective where we're already priced in a recession. All the bad news is priced in, and I talked about that. That if you have the whole surrounding area, imagine that just being gas being turned on, propane gas in a room, you're sealed, and that's all bearish sentiment. All it takes is one match. All it takes is a peace deal in Russia and Ukraine. China gets out of lockdowns, which you could see that slowly and surely coming. That was worth a couple of days of green. And the Fed. If the Fed says, hey, we're going to slow down on tightening, that's an ignition right there. So again, a lot more view is to the upside because you have so many people that are bearish at one point. Now that's just pure technicals. In terms of fundamentals, the economy, yeah, the job market's fine, but inflation is too high. That's not sustainable. So Friday we'll get a CPI number month over month with the core. Let's see if we're getting at least some kind of stabilization. That'll give us a big idea of a possible recession to come. And the recession, guys, don't get it twisted. It would be Fed induced, a Fed induced recession to kill inflation. That's the poison pill, let's call it, to defeat inflation. Thoughts on Apple calls? I do have some actually. Taking a look at Apple on the hourly. It's at about 50 cents pre-market, not much of a mover, but I do expect 150 to come to fill this gap here around 151.43. If we get to 4,200 S&P, you're pretty much at home around 152 on Apple, depending on the price action. But we know how much Apple means to the S&P. So again, I am bullish. I know, nothing new. Don't be too surprised. But again, I think we hold these moving averages. We hold 4,100. If not, obviously we'll hold 40.75 if that's the case. But I think the lowest point we'll get today is around 41.25, worst case, and then we'll get to 4,200 by the end of the week. Friday being CPI, which is kind of weird. It's usually on Wednesday. But again, let's see if we get out of this range. Again, we're seeing the consolidation. A big move is coming. When the range is getting tighter, guys, for a longer period of time, some kind of move will happen. Breakout or breakdown. I say breakout, but let's see what happens. Thoughts on oil? Do you expect price to continue by the end of the year or break below 90 this year? I think what happens in terms of oil prices is that I think we take a step back first. Maybe we get to 110, maybe 100. Cross your fingers. Again, I'm talking strictly energy consumers, not investors, obviously. But again, that would be helpful for the stock market too, because that's more discretionary money to buy stuff. But if that happens, inflation goes higher. So it's kind of a messed up circle, right? In a sense. And then these companies don't know how to do their inventories correctly based on the change in behavior from the consumer. Remember, we went from buying stuff to doing stuff, right? Travel companies, Alaskan Air CEO is saying he's never seen demand like this for air travel in his career. So who knows how long that guy's been doing it? Either 20 something years or a couple of months. I'm not sure. But at the end of the day, looking at oil again, it is overbought. But it tends to stay overbought long term. At least it stays overbought for a little bit of time. Excuse me. These energy companies. I think with the summer driving season, we'll definitely top out. Maybe I think at worst 150. I don't think that's a possibility unless something really bad happens in Russia and Ukraine, or some really like I would say that would cost some kind of horrific act in terms of a refiner, where you get a spike or another geopolitical conflict, let's just say. You would need a lot of bad things to happen to get oil to 150. You need only a couple of good things to happen to get oil to go down. But again, today we will see crude oil inventories at 10:30 this morning. I'm going to take a look at that. Let's see if we still have a stock, if we have a stockpiling or a draw. API showed a draw yesterday. So again, coming out of the supply and again making it more valuable. That's why it's up today. So, do I think we'll get to $90 a barrel oil by the end of the year? That's a good possibility. I think that's a little overshooting to the downside. I say if I had to put a price target, probably 110, 115 sounds about right. I mean, you're not going to get a big dramatic change in oil demand in 6 months. That's just not how it works. Would you buy airlines here while other travel energy have boomed? Airlines have barely moved. I do own some airlines. Yes, I do. But again, the only reason airlines is not moving as much as energy or travel companies is because of fuel costs. So the demand goes higher for travel. What do you think? They need more jet fuel. So that does hurt the airlines. But again, I want to take a look at their earnings report. That's in a couple of months. We'll see how their bottom line is. Let's see if they buy back stock. Maybe they're fixing up their balance sheets, dividends possibly. We'll see. I think airlines do benefit, of course. Obviously, they've been benefiting from better travel and a shift to consumers. The problem is that they got to pay for fuel too. So energy costs go up, that hits the bottom line. So is that energy cost enough to basically take away that boom in travel? That's the tough part to call, is that if your travel is up 30%, but your fuel costs are up 60%, that's going to offset. So again, what are the airlines going to do? Are they going to raise prices? Are they going to have a airline surcharge for fuel? I believe that did happen in 2008, where we had $150 a gallon, $150 a barrel oil. So that's something that's not out of this world. All right, guys, we'll go and leave it there. Have a great rest of your afternoon and day. I'll catch you guys for the aftermarket recap at 5 p.m. I won't be late this time. Cheers, guys.